Toronto home prices dropped 4% year over year. Vancouver condos are down 11%, and mortgage delinquencies in Ontario just hit their highest level since 2012. If you've been watching the Canadian housing market, you know something major is happening. But here's what most people aren't seeing. While Toronto and Vancouver are melting down, Quebec home prices jumped 8% in the same year. Today, we're breaking down what's actually happening in every major Canadian market right now because the story you're hearing on the news is only showing you half the picture. Let's start with Ontario because this is where things are getting ugly. The average home price in Toronto hit $800,420 in December 2025. That sounds expensive, and it is. But here's the thing. It's down 2.3% from November and down 4% from a year ago. The benchmark price is sitting at $749,400, down 5.6% year over year. Sales dropped hard in December. We're talking 8,806 homes sold, unfortunately, which is down 27% from November. Now, some of that is seasonal. December is always slower, as we all know, but year-over-year sales are only up 1.2%. The sales to new listings ratio jumped to 74% in December, up from 49% in November, according to WOA.ca data from January 2026. But if the overall market was concerning, the condo situation is a complete disaster. The GTA condo market experienced what TD Economics called a severe downturn in 2025. They're projecting an additional 10% price decline in 2025, which would bring total declines to 15 to 20% from the Q3 2023 peak. Think about that. If you bought a condo at the peak in 2023, you could be looking at losing up to 20% of your value. Construction starts fell 88% below historical averages. New home sales collapsed to 1,599 units, which, according to Deeded and Better Dwelling data from 2025, is the weakest performance since the early 1990s real estate crash. The early 90s crash. We're talking about comparing today's market to one of the worst housing crashes in Canadian history. And here's something that really tells you where things are headed. Toronto's population actually contracted in 2025. This is the first non-pandemic population contraction in the region's entire history, according to Better Dwelling. Young adults are leaving. They're going to other provinces, other countries. When people start fleeing your city, that's not a temporary blip. That's a fundamental shift. The mortgage situation is getting dangerous, to be honest. Ontario's mortgage arrears rate more than quadrupled in just over 3 years. As of November 2025, it hit the highest level since 2012, according to the Canadian Bankers Association data reported by Better Dwelling. When people can't pay their mortgages, foreclosures follow. When foreclosures hit the market, prices drop further. It's a cycle that feeds itself. Let's put that in perspective. The mortgage arrears rate quadrupling means 4 times as many people are behind on their payments now compared to 3 years ago. We're not talking about a small increase. This is a massive jump in financial stress. And when you combine that with falling prices and people leaving the city, you start to see how this becomes a real problem. Homeowners who are underwater on their mortgages, meaning they owe more than the home is worth, can't just sell and move. They're trapped. And when people are trapped, desperation sets in. The condo market is where you really see the stress. Remember those pre-construction condos people bought in 2021 and 2022? A lot of those are completing now. Buyers are facing completion costs that are way higher than they expected on properties that are worth less than they paid. Some are walking away from their deposits rather than close. Others are closing and immediately trying to sell, flooding an already oversupplied market with more inventory. It's creating this downward pressure that keeps building. Let's move west to British Columbia because Vancouver is having its own set of problems, just playing out differently than Toronto. The average home price in Vancouver was $1,189,227 in December 2025. Yes, over $1 million on average. But it's down 6.8% year over year, and this is the lowest it's been since January 2023, according to WOA.ca. The benchmark price is $1,114,800, down 4.5% year over year and 0.8% month over month. Sales are sliding. December 2025 saw 1,537 homes sold, down 12.9% from December 2024. Some reports show 4,271 sales, down 5.9% year over year. What matters more than the exact number is the trend, and the trend is down. Active listings jumped to 12,550 in December 2025, up 20% year over year. More importantly, Vancouver now has 8 months of inventory. That's a buyer's market. When you have more than 6 months of inventory, buyers have the power. Sellers start getting desperate. Different property types are getting hit differently. Detached homes averaged $2.05 million in December 2025, down 3.6% year over year. Attached homes averaged $1.20 million, down 4.3%. But condos are getting crushed. The average condo apartment was $720,000, down 11% year over year, according to WOA.ca data from January 2026. The new condo pre-sales market is in crisis mode. By spring 2025, year-to-date sales were down roughly 60% from the already weak 2024 level, according to the Real Estate Institute of Canada from January 2026. Projects are being shelved or completely redesigned. Developers are looking at the market and saying, "No thanks, we'll wait." Think about what that 60% drop means for the future supply pipeline. Developers aren't stupid. When they see pre-sales collapsing, they stop building. When they stop building, construction jobs disappear. When construction jobs disappear, fewer people can afford to buy homes, and the cycle continues. Vancouver has always been expensive, but there was this belief that it would always go up, that foreign money would keep flowing in, that wealthy immigrants would keep buying. That belief is being tested right now. With 8 months of inventory sitting on the market, sellers don't have leverage anymore. Buyers can lowball, they can walk away, they can wait for a better deal next month. That's a completely different dynamic than what Vancouver has seen for the past decade. Now here's where the story gets interesting. Because while Ontario and BC are struggling, Quebec is absolutely thriving. Quebec has the strongest market in Canada right now, and it's not even close. The average home price in Quebec was $551,998 in December 2025, up 8% year over year, according to WOA.ca. The benchmark price is $529,600, up 7.1%. Sales are down 11.8% year over year to 5,868, but that's coming off a hot market. The sales to new listings ratio is sitting at 111%. That means more homes are selling than hitting the market. That's definitely a strong seller's market. Montreal specifically saw average home prices hit $674,717 in December 2025, up 8.7% year over year. Quebec City was at $479,130, down 1.8% monthly, but still holding strong overall. Royal LePage is projecting a 12% aggregate price increase in Q4 2026 compared to Q4 2025 for Quebec. That's the highest in the nation. While Toronto and Vancouver are bleeding, Quebec is running hot. Why is Quebec doing so well while the rest of the country struggles? It comes down to affordability and fundamentals. Quebec housing is still relatively affordable compared to Toronto and Vancouver. You can actually buy a decent home in Montreal for under $700,000. In Toronto, that gets you a small condo. In Vancouver, it gets you nothing. People and businesses are relocating to Quebec because the math actually works. But there's more to it than just affordability. Quebec never had the same speculative frenzy that Toronto and Vancouver experienced. The run-up wasn't as extreme, so the correction isn't as severe. Prices rose steadily based on actual demand from people who wanted to live there, not from investors flipping properties or parking money. The sales to new listings ratio at 111% tells you everything you need to know about supply and demand. For every 100 homes that hit the market, 111 are selling. That's not sustainable long-term, but it shows you how tight the market is right now. Buyers are competing for limited inventory, which pushes prices up. Montreal specifically has become attractive to young professionals and families priced out of Toronto. You can work remotely for a Toronto company, get paid Toronto wages, and live in Montreal at Montreal prices. That arbitrage is real, and people are taking advantage of it. The city has culture, good food, lower cost of living, and now it has a hot real estate market on top of it. Alberta had a massive run-up over the past couple years, but things are starting to cool off now. The average home price in Alberta was $512,556 in December 2025, up 0.3% month over month and 3.8% year over year according to WOA.ca data from January 2026. That's still growth, but it's modest compared to what Alberta was seeing in 2023 and early 2024. Sales dipped 25% month over month in December, though that's largely seasonal. What matters more is that supply and demand are getting more balanced. It's not the feeding frenzy it was a year ago. Calgary and Edmonton increased housing starts for missing middle housing by 67%, according to True North Mortgage from January 2026. That's townhomes, low-rise apartments, the stuff between single-family homes and high-rise condos. Calgary's new city council actually repealed the recent blanket rezoning, which is going to be interesting to watch play out. Alberta benefited massively from interprovincial migration. When Toronto and Vancouver became unaffordable, people moved to Calgary and Edmonton. But that wave is slowing down. People who were going to move already moved. The low-hanging fruit is gone. Here's what happened. In 2022 and 2023, Alberta saw this huge influx of people from Ontario and BC. Young families, professionals, people who could work remotely. They sold their expensive Toronto condos or Vancouver townhouses, moved to Calgary or Edmonton, bought bigger houses for less money, and still had cash left over. That drove demand through the roof. Prices jumped, inventory disappeared. It was a seller's market. But now in late 2025 and heading into 2026, that migration wave is slowing. The people who were willing to leave already left. The ones who remain in Toronto and Vancouver are staying put, either because they have jobs they can't leave or because they're too underwater to sell. And locally in Alberta, wages haven't kept up with the housing price increases. That 3.8% year-over-year growth is positive, but it's a far cry from the 15 to 20% annual gains Alberta was seeing in 2023. The missing middle housing push is smart though. Calgary and Edmonton outing more townhomes and low-rise apartments addresses the supply issue without flooding the market with expensive single-family homes or luxury condos. It's housing that people actually need and can actually afford. Whether it's enough to keep the market balanced remains to be seen.
Saskatchewan is one of the hottest markets in the country right now. Average home price growth was up 9% in 2025, according to TD Economics and WOA.ca. Strong affordability and solid job growth are supporting demand. Resale listings are low, which is keeping conditions tight. TD Economics expects price growth to slow in 2026, but remain solid. Manitoba is showing decent job growth despite trade war pressures, according to TD Economics from 2026. Affordability has gotten worse there too, but demand is holding up. It's not spectacular, but it's stable, and in this market, stable is good. The Atlantic provinces are doing something interesting. In December 2025, they were the only provinces to see monthly sales increases, according to NerdWallet Canada for May 2025. New Brunswick saw 23 additional sales. Prince Edward Island saw 15 additional sales. Nova Scotia saw 62 additional sales. Average selling prices are under $500,000 in all three provinces. That matters. When you can buy a house for under $500,000, you're accessing a completely different buyer pool. Young families who are totally priced out of Toronto can actually afford to buy in Atlantic Canada. The Atlantic provinces aren't seeing explosive growth, but they're seeing steady demand and reasonable prices. In a market where Toronto condos are crashing and Vancouver inventory is piling up, steady and reasonable looks pretty attractive. So what are we actually looking at here? Canada doesn't have a housing market anymore. It has 5 or 6 completely different regional markets that are moving in opposite directions.
Toronto and Vancouver, the two markets that drove Canadian real estate for decades, are in serious trouble. Prices are falling, sales are down, inventory is building, mortgage delinquencies are spiking. People are leaving. These aren't short-term corrections. These are structural problems that are going to take years to work through. Quebec is the big winner right now. It's affordable enough to attract buyers, but expensive enough that people who own property there are seeing solid returns. Montreal is becoming the destination for people and businesses leaving Toronto. Alberta had its boom and now it's normalizing. Saskatchewan is hot. Manitoba is stable. Atlantic Canada is quietly chugging along. If you're looking to buy, your strategy completely depends on where you are. Toronto and Vancouver might see more pain before things stabilize. You might get a better deal waiting. Quebec, you're probably going to pay more if you wait. Alberta, Saskatchewan, the window for deals is closing. Atlantic Canada, you've got time, but don't wait forever. If you own in Toronto or Vancouver, especially condos, you need to be realistic about what the next couple years might look like. Projections are calling for additional 10% declines. That might be conservative. When mortgage delinquencies are at 12-year highs and population is contracting, the floor isn't clear yet. If you own in Quebec, you're sitting pretty. If you own in the prairies or Atlantic Canada, you're probably fine. The big question is what happens when interest rates come down. The Bank of Canada can't keep rates this high forever. When they start cutting, does Toronto and Vancouver bounce back? Or have these markets fundamentally changed? Are we looking at a new normal where Montreal is the affordable major city and Toronto prices stay suppressed for years? One thing that's clear from all this data is that location matters more than ever. The idea that Canadian real estate always goes up everywhere is dead. Some markets are going up, some are going down, some are flat. Your zip code determines your outcome more than anything else right now. For first-time buyers, this creates both opportunities and risks. If you're in Toronto or Vancouver, you might finally see prices come down to something approaching reasonable, but you also might be catching a falling knife. If you're in Quebec, you're competing with everyone else trying to get in before prices climb higher. If you're in Alberta or the prairies, you're looking at stable markets with decent affordability, which might be the sweet spot. For investors, the math is completely different depending on region. Toronto and Vancouver rental yields have been terrible for years because prices were so high. Now, with prices falling but rent staying relatively stable, yields are improving. But you're betting on a market in decline. Quebec offers growth, but you're buying at higher prices with the risk that growth slows. Alberta offers balance, but the huge gains are probably behind us. The condo situation specifically deserves attention. Condos are getting hit harder than any other property type across the board. Vancouver condos down 11%, Toronto condos in severe downturn with projected 15 to 20% total declines from peak. Even in hot markets, condos are underperforming. Part of that is oversupply. Part of that is changing preferences after the pandemic. Part of that is higher condo fees eating into affordability. Whatever the reason, if you own a condo or you're thinking about buying one, you need to be aware that this asset class is facing headwinds that detached and attached homes aren't seeing to the same degree. According to the data we're seeing from CMHC, from TD Economics, from the Toronto Regional Real Estate Board, from all these sources, we're in the middle of a major restructuring of Canadian real estate. Some regions are winning, some are losing, and it's not clear yet where we end up. The population movements tell a huge part of this story. Toronto losing population for the first time in its non-pandemic history is a watershed moment. Cities don't just lose people by accident, they lose people because the value proposition breaks down. If you can't afford to live there, if your quality of life is suffering, if you can make more money or have a better lifestyle somewhere else, you leave. And when young adults specifically are leaving, that's a warning sign for the long-term health of the market. Young adults are the future homebuyers, the future taxpayers, the future economic engine. Meanwhile, Quebec is attracting those same young adults. Montreal is becoming what Toronto used to be, the place where young Canadians moved to build their careers and lives. The fact that you can still buy property there without being a millionaire or having family money is a huge advantage. Royal LePage's projection of 12% growth in Q4 2026 compared to Q4 2025 reflects that fundamental demand. The Atlantic Canada story is probably the most overlooked. Those monthly sales increases in December when every other region saw declines tell you that there's genuine demand happening there. Properties under $500,000 make home ownership accessible to regular working people, not just high earners or investors. As remote work becomes more permanent and people realize they don't have to live in expensive cities to have good careers, places like New Brunswick, Nova Scotia, and PEI become viable options. What we're watching in real time is the end of the Toronto and Vancouver dominance era of Canadian real estate. For decades, those two cities drove the national conversation. Prices there set the tone for the whole country. Government policy was shaped around making housing in those cities more accessible. Now those markets are contracting, while Quebec, The prairies and Atlantic Canada are holding steady or growing. The center of gravity is shifting. The Canadian housing market in 2025 and heading into 2026 is split down the middle. Ontario and BC are facing real corrections, with Toronto condos potentially down 15 to 20% from peak, and Vancouver inventory building month after month. Quebec is running hot with projected 12% growth. Alberta is cooling but still positive. The prairies are holding strong with Saskatchewan up 9%. Atlantic Canada is steady with prices under $500,000, keeping them accessible. Whether you're buying, selling, or just watching, you need to stop thinking about the Canadian housing market as one thing. It's not. It's a collection of regional markets with completely different dynamics. What happens in Toronto tells you nothing about what's happening in Montreal or Saskatoon or Halifax. Feel free to drop a comment below and let us know what you're seeing in your local market. Are you in Toronto watching prices fall? In Quebec watching them climb? In Vancouver waiting for the bottom? Let's talk about what's actually happening on the ground where you are.